Hi, welcome back to another weekly market outlook. This is for the 15th of April 2024. So there's actually a lot of stuff to talk about from last week. Let's recap what's been going on from last week. I think we'll start with the central banks first. RBNZ, Bank of Canada, and the ECB pretty much stay on put with their interest rates. No changes. There are comments though coming up from the ECB that pretty much kind of gave a little bit of a stronger indication that a June rate cut will still likely to happen. And in terms of whether or not they should diverge from the FOMC in terms of the ECB, they are kind of independent at this point in time, and they could potentially cut their interest rates before the FOMC, especially with consideration that the FOMC might not actually cut in June. Partly because of the inflation numbers coming up from the US. We saw an increase to 3.5% from 3.2%. That's a 0.3% jump. That's a huge jump for inflation. Core inflation remains the same though, so we don't actually see a decrease in terms of core inflation. If we take a look at the monthly changes for the CPI numbers as well as the core CPI, it is up to 0.4%, and that's higher than what the market consensus is, which is for a slight drop to 0.3% in terms of growth. So we don't actually see that change in terms of monthly growth, and we saw that CPI, the headline inflation number, does pick up to 3.5%. In addition to that, the PPI numbers from the US, that's a little bit mixed in terms of the PPI numbers. We saw an increase on the yearly numbers, but the monthly increases that we saw here, the PPI numbers, it is lower than the consensus at 0.2%, where market's expecting 0.3%, but the core PPI is as per consensus. And we also have the weekly unemployment claims. We also have a little bit of a revision from the previous week, which was revised up to 222,000, and we have a result that's actually below the consensus at 211,000, which is showing a very strong labor market in the US there. So yeah, we saw the dollar strength obviously last week, and it's really kind of one directional at this point in time, considering that the increase in the CPI numbers does give credit to the FOMC that, you know, they shouldn't be cutting rates too early. And that's basically what we have been saying for the past 6 months in terms of what's been going on with the FOMC, the potential rate cut. And, you know, we have always stick to the notion that cutting interest rates too early, it's actually not good for the market. And considering that the inflation remains sticky, in fact, it is picking up a little bit again. And partly because of the housing market in the US, it's pretty much a rental that's really pushing inflation up, as well as services, and also an increase in energy prices. So it is still too early for the FOMC to cut interest rates. So what might happen is with the June interest rate decision, they might actually not cut interest rate in June, and they might actually just have 2 more cuts in 2024 instead of the predicted 3 cuts for 2024. So that's pretty much it for the FOMC. This week, we are looking at the retail sales number coming up from the US on Monday. We have the Chinese GDP numbers on Tuesday, UK employment numbers on Tuesday. We also have the Canadian CPI numbers on Tuesday as well. If we take a look at the trim CPI numbers, it is expected to remain flat at 3.2% for Canada. We have the UK inflation number as well. This is going to be on Wednesday. UK inflation number is expected to drop down a little bit from 3.4 to 3.1%. Therefore, giving another notion that the Bank of England probably will need to join the ECB in terms of cutting interest rates before the FOMC as well. Australian employment numbers, which is going to be released on Thursday, and then we have the UK retail sales number on Friday. I don't think this is a huge impact news in terms of what's going on here, except for the UK CPI numbers. So I think for the UK CPI numbers, as well as today's retail sales number coming out from the US, I think these are going to be the two main focus for fundamental events for this week. All right, let's just jump in onto the technicals, and I want to show you the dollar index. And it's very rare that I show you the dollar index, but I just want to point out that we have broken out of the range between 103 to 105. We are now at about 106, so this actually has a little bit more room to go. And in terms of the fundamentals for a stronger US dollar, that is still in play. I think the whole world is looking at that currencies being smashed by the US dollar pretty much last week, and into the foreseeable future as well. This one here is at 106. We're actually having a little bit of a potential target towards 107. In terms of the momentum, yes, there is actually room for this one to push a little bit higher. We might see this dollar index here, if it doesn't surpass 106 in the first 2 days this week, so either Monday or Tuesday, if it doesn't surpass 106, we might actually see a little bit of a pullback and kind of a little bit of a breather there towards 105.50 and potentially towards 105, but it's highly doubtful that we could actually break below 105, considering that all the major fundamentals for the US economy for this month has already been printed out, and it all has surpassed what the market expectation is. So right now, in terms of whether or not the US dollar is actually going to weaken, obviously it falls onto several different factors. And obviously one of the few things to consider is the intensifying situation with Israel, and considering that Iran is now back into the picture, that we actually pushed out an outlook about 6 months ago, considering the potential of what could happen to the financial market should Iran came out and be a little bit more frontal in terms of their involvement in the whole conflict, and that has already happened over the weekend. We should also be focusing a little bit more on the oil market as well, which was something we are going to discuss today. But yeah, this has also pushed the US dollar as a safe haven, and that's kind of given that force there. Obviously, we haven't seen the impact of the US dollar being the safe haven, because the sharp increase that you see there, that was actually on Friday. The attack from Iran to Israel, that happens on Saturday, Sunday to some regions. So yeah, we actually haven't seen that push for the safe haven run on the US dollar yet. That could happen on the first 2 days of this week. All right, let's take a look at the Aussie dollar here. The Aussie dollar, since it broke below 65.50 and 65 cents, we have seen further push lower. And obviously, if we take a look at what's been going on here, we did saw the market pull back up and retest 66 and 66.50, which we have mentioned as a stronger resistance. And considering the movement last week, we saw a very sharp rejection there, obviously following the US higher than expected inflation number there. So that drop was pretty much one directional. We saw that break below 65. We do have a little bit of support right now left at 64.50, but below that we are looking at more push lower towards 64. We might see a little bit of a short-term correction back to test 65 cents, but I think 65 to about 65.50 should hold as a resistance for the Aussie dollar at this point in time. We do have a new fair value gap that has been adjusted right now. That's between 65 cents to 66. So we saw in terms of resistance, it has come down by about half a cent on the Aussie USD here. Euro USD, obviously this is the key factor to talk about. We have been talking about a potential collapse on the Euro USD, especially since we lost that sell side liquidity about 2 weeks ago on the Euro USD. There is a resistance trend line that's been capping the market, and that resistance trend line has acted perfectly. In addition to that, in terms of where that resistance trend line and rejection that happened on the Euro USD last week, that's pretty much at 1.0850, 1.09 level, which is a very important level for the Euro USD. So we saw that rejection happen. This is all perfect textbook in terms of technical analysis. We saw that rejection happen at 1.0850. We saw that push towards 1.07, and over the weekend we broke 1.0650. So we are right now, we have broken a lot of key supports for the Euro USD. For this week, we are expecting the market to potentially retest 1.07 first. Might see a little bit of profit taking about 1.06 on the Euro USD. Might see a little bit of a snapback towards 1.07, but ultimately the weekly pivot is located at 1.0725. That's going to be the key resistance to watch out for this week. We expect more sellers to come in at about 1.07, 1.0725 if there's that pullback there, and then we might see further stronger push lower for the Euro USD. Take a look at where the support one is located. That's pretty much at 1.055 to 1.05. We do have a little bit of an order block around that level there, which is also a key psychological level for the Euro USD at 1.05. So those are going to be the projected target on where the Euro USD is likely going to be pushed towards. Whether or not we saw that pullback towards 1.07 or we see a quick drop towards 1.0550, 1.05, and obviously it really depends on whether or not 1.06 hold at this point in time. But the momentum for the Euro USD still remains to the downside. The trend remains to the downside for the Euro USD. The Pound USD, similar situation here. We have broken that key order block pretty much at 1.25, 1.2550 level as well. We are right now about 1.2450, so we do have a little bit of support towards at about 1.2450. We are now expecting that 1.25 and 1.2550 to be a strong resistance for the Pound USD. We expect that level to fail again should there be a retracement, and we prefer to continue to short the Pound USD at those levels. Obviously, this would depend on the UK inflation number. If the UK inflation number does drop down below 3%, then yeah, we might actually see a lot more stronger selling on the sterling there, with the expectation that the Bank of England will need to cut interest rates faster than the FOMC at this point in time, obviously joining the ECB, and that's the kind of the logic push behind what's been going on the Euro USD and the Pound USD at this point in time. In terms of how far can it go, we are looking at the support one area, which is about 1.23, 1.2350 for the Pound USD at this point in time. Also, take a look at where the pivot is located, about 1.2530, 1.2525. That's pretty much in between the order block on the upside. So we expect that 1.25, 1.2525, 1.2550 to be the key resistance for this week. In terms of support, we're looking at 1.23 and 1.2350. All right, next up is the Dow Japanese yen. Obviously, we have been sticking to the notion that the intervention might not happen at 152. It might happen at a level higher than that. We're looking at 153. Obviously, on Monday, price is already above 153. It's actually at 153.75 at time of recording. So we're looking at towards 154, 155 before we see a little bit more profit taking to happen on the Dow Japanese. And so the trajectory for this one is still to the upside. In terms of support for the Dow Japanese, there's a lot of support for the Dow Japanese. Obviously, 152 previous key resistance, 151 and 150 is still going to be that stronger support for the Dow Japanese. And doesn't change the fact that in terms of the interest rate differentials, it is still a huge difference between Bank of Japan and the FOMC at this point in time. So yeah, especially if the run towards safe haven and if the situation intensifies in the Gaza Strip, then yeah, we expect a much stronger push for the Dow Japanese at this point in time. All right, let's move on to commodities. With gold, we have been putting out a fair warning for gold. We do not know the exact point of resistance for gold. Right now, we have a little bit of an estimate last week at about at 2350. That's kind of the limit on that. We saw market spiked up above 2,400, but immediately come crashing back down pretty much last Friday. So I think a lot of bulls were kind of trapped last week on Friday. There was a lot of damage that's been done, but we now, for now, we know what's been going on here. I think we are looking at a little bit of a jitter in the market there in terms of how far it can go for gold. So 2,400 is obviously the level where we saw that profit taking happen. We saw that pullback right now for gold. Right now, price is at about 2,350. Obviously, this is still about the pivot levels there. In terms of resistance, we're still going to be looking at 2,400. In terms of support, we're going to be looking at 2,300. Any move below that support one, we're looking at a pullback towards 2,200. That's where the fair value gap is located, and also where the support 2 is located for gold at this point in time. So this one here is still a very high risk assets to trade. Really depends on what's been going on here. The situation that intensifies in the Gaza Strip doesn't necessarily mean that gold is the one to go to, because there are alternatives in terms of the more immediate impact to the intensifying situation over there. And one of them is obviously oil. We haven't seen oil move, and this could actually be a good thing to consider. If Iran comes into play, as we pushed out the analysis on if what happens if Iran comes into play with the whole situation in the Gaza Strip about 6 months ago, oil prices could be driven up really high, and that's actually the worst case scenario. We could actually see a return above $90 for oil, and potentially even towards 95 and 100. So yeah, looking at that potential scenario and looking at the current situation right now in terms of oil prices, we haven't seen a gap to the upside, right? I was expecting a gap to the upside for oil. We are not looking at that. We are still sticking at about $85 right now. This is for the WTI or the XTI. For this one here, this is still technically in a strong uptrend. There's actually a very high risk that gold could actually increase a lot more. We are looking at $85 as a support level here, but the key levels where a lot more traders are probably going to jump in to buy oil, it is actually located at $83 to $84. So there are a couple of strategies here. If we expect the situation to worse, we are looking at potentially buying oil at the current price level. So we might actually do a little bit of a small position at 85, kind of if it drops down a little bit towards 84, you want to layer that in. And if it goes down towards 83, obviously we want to add more position into that. The whole thing though does have a limit to that. If price breaks below $80, that could actually send oil prices down significantly. So if you are thinking of planning to add oil into your portfolio, make sure that you do have a very strict stop loss, pretty much at $80 or $79. Just keep that in mind. But for oil, yeah, this is going to be driven by more on the geopolitical tensions rather than anything else in terms of the demand. Do keep in mind about 1/3 or 20% of oil transport actually has to go through Iran. And Iran is actually also one of the larger oil producing nations as well. So obviously this will have an impact into the oil supply level. So yeah, just keep that in mind as the situation intensifies. Would this be considered a high risk event as well? I would think so, because this is tied into a geopolitical events where we don't actually have a strong predictions in terms of how the situation could actually develop as well, right? Especially it could go in a lot of different ways in terms of whether or not Iran's going to be involved, whether or not the US is actually going to be involved. There are actually a lot of factors to consider about as well. All right, so with that, good luck for your trades for this week, and I'll see you soon.